Well, is the AI euphoria over? While major product announcements featuring artificial intelligence have been coming out of CES all week long, big companies like Samsung have been taking hits as the new technology isn't yet boosting sales. We also got RBC Capital Markets' Laura Calvasina saying she sees more downside in tech. In a note out this morning, she downgraded tech to market weight. That's down from overweight, saying that after a massive rally in 2023, the tech sector's valuations are clearly expensive for the median stock in the sector. Well, joining me now with his take on this is Chris Versace, Tematica Research Chief Investment Officer. Good to see you. So I first want to get your take here on this euphoria that we've seen in tech stocks. I mean, year to date, apart from, I believe, just Apple and Tesla, we are seeing the Mag 7 still in the green, but how should we really measure our expectations right now?
Well, I think it's a mistake, Rochelle, just to think of, the last, few days. We've only just begun 2024. And I think it's, the smarter view is to take a longer look back, really from that late October timeframe when, not only did the overall stock market do extremely well, but the stocks that you're talking about once again moved higher, continuing a very, very rapid year of growth for them. That dated back to just about the March-April timeframe when the Magnificent Seven, as you call them, really started to take off. And I think against that context, you really have to take stock because a lot of this was driven by the AI euphoria, the promise of AI. And I think as we move into 2024, these stocks, as well as others, have to start showing revenue. They have to show the promise of the AI phenomena starting to deliver. And you referenced CES, and we have seen a number of different companies talk about AI-enabled products, smartphones, TVs, robots, and other devices. But a lot of these things aren't going to hit shelves until the second half of this year at the soonest.
So then, as we're seeing some of these analysts saying, look, some of the euphoria's come off of it, it seems like you're saying it's too early for that, especially as we look at some of the offerings out of CES. We saw Walmart revealing its generative AI search, its AI replenishment moves as well. So really showing more adoption and how some of these applications are going to be used here. What are you going to be looking for, not just out of CES, but also in some of the talk you'll be hearing in earnings season after what we saw with the last quarter and AI really on the minds of everyone on these earnings calls?
So you hit a great point, right? We need to see the AI phenomena start to mature a little bit. We do want to see, the first wave of that's going to be a wave of products. Some of them will be for the enterprise, some of them will be for consumers, such as in smartphones. But then we need to see them start to foster the upgrade cycle that people are calling for, the use case, and folks actually using them. So that's going to unfold over the next couple of months, next couple of quarters. But in terms of the upcoming earnings season, wow, this is going to be really interesting because we're going to hear companies reset expectations, most likely for 2024. My personal view is the market's a little out over its skis with more than 11% growth for the S&P 500. But as it relates to AI in particular, we're going to want to hear companies outside the Magnificent Seven announcing applications, products, all leveraging AI. We're going to want to hear companies like Microsoft saying, hey, middle of last year, we said we need to really invest in AI. We have, and we're starting to see those products come to market. Rochelle, I think that's the key as it relates to the AI over the next couple of weeks.
So then, Chris, as you look at AI, of course, it goes hand in hand with cybersecurity, obviously been on the minds of regulators. We saw that snafu with the SEC, their Twitter account, their X account being hacked with that false announcement. A simple two-factor authentication apparently could have prevented some of that. But what does that tell you about how much cybersecurity should also be in people's portfolios as they also balance some of these big tech stocks that are focused on AI?
We have said, and we will continue to say the following. As we move deeper and deeper into this increasingly connected world, which will only accelerate because of the use of AI, there are a number of reasons to be long-term bullish on cybersecurity, but also data privacy as well. And I would say, look, there's a bunch of high-profile cybersecurity stocks out there: Palo Alto Networks, CrowdStrike, F5. And the like. For a lot of folks, the easier way might simply be to own an ETF, whether it's the hack ETF, the cyber ETF, HACK or CIBR, other ticker symbols. You get great broad-based exposure in a rapidly evolving industry, almost a constant one-upmanship between the attackers and the protectors. And I like that well-rounded coverage because you're not making any one particular bet. But make no mistake, Rochelle, investors, you have to own cybersecurity.
And certainly, it's not something we've heard a lot of people talking about at this point when it comes to AI investing. Sort of a lot of the attention going to the Nvidias of the world. But I do want to ask you about some of the broader aspects of the rally that we've seen. What else is lifting markets once you look beyond a lot of the generative AI buzz?
Well, I think, over the last, call it 2.5 months, you've seen, a very wide lift in the market, pretty much the widening out that people had been looking for. I think the question is, given where we are in the market, it's going through a period of digestion. We have the December CPI report tomorrow. That could really reset the market's expectations for the number of rate cuts in 2024 and that earnings season that's coming up. The question to me as an investor is, geez, where do we see continued growth prospects, irrespective of most of that, over the next couple months, over the next couple of quarters? And one of the areas that we've been very bullish on has been tied to infrastructure spending. We've done extremely well in the AAP portfolio at the street with the shares United Rentals, Vulcan Materials. But now, in addition to the Biden infrastructure law, we're starting to see the dollars flow for the CHIPS Act, and that's going to be another wave of building that benefits those stocks as well as others. It also bodes very well for a number of the semi-cap companies, particularly in the second half of the year. But again, a rising outlook.
We'll continue to track that, at least ending on some optimism there. Appreciate you as always, Chris Versace, Tematica Research Chief Investment Officer. Good to see you.
Good to see you.